In this video, traders, we're going to look at the clue from the little to no price retracement. Stay tuned. Hey traders and investors, a very warm welcome to you. Okay, so we know that one of the most powerful trade setups or strategies that we can do is buying a pullback in an uptrend, selling a pullback in a downtrend. It's the cornerstone, the foundation of multiple trading strategies out there. We've talked about adding things like moving averages to try and time it. We've talked about things like adding overbought and oversold stochastics to try and time it. Ultimately, it is one of the best trading strategies that we can get, is getting on board a trend on a pullback. So with that in mind, let's have a little look about this little to no price retracement clue, which is going to help us dig into the very best sweet spot of buying the trend. Now, before we go into it, let's just think in terms of supply and demand. The key to understanding why a setup is working, the key to understanding what the crowd may do after you've entered, because ultimately that's how we make money, guys. If we buy, we want the crowd or the most money to buy after us if we're shorting, vice versa. So we have to think in terms of game theory. What are our opponents going to do? So how do we do that? We look at clues that price action or chart patterns, whatever you want to call it, is telling us now as to the supply-demand imbalance to infer what might happen next. So this is what we're doing right now with this. Okay, so I've got two different charts for you. I've got A and B. I have a price difference of Y. So in other words, we've moved from here to here and the high is Y. Call that $100 if we want to make it easy. That's 100. It's the same here, that's 100. And we've got the time along here, and let's call that 100 minutes. Okay, it could be 100 days, doesn't matter. The point is the time X is the same. If we went down from there, the time X is the same, the high is the same. However, after that high, we've got two different price patterns. Now, forget for the moment, this looks like a little bit of a flag, and that's really where the flag comes from, but forget that for now. I want to dig into something a little bit deeper than that. So two distinct patterns. So after this point here, in fact, I'll probably use a different color pen for that. I think I've got a purple in my pocket. I have indeed, perfect. After this point here, things change. This is identical. This is where things change. So now we're going to get to the point of inferring what supply and demand is telling us to then extrapolate that out as to what might happen next. So what is supply and demand telling us here? Supply and demand is telling us, or should I say, what is price pattern telling us about supply and demand? Okay, we need to take it step by step by step by step before we get to the idea of a trade idea. So what is it telling us? It's basically saying, hey, we've driven up from here to here in a set period of time, and now price is being accepted. So let's look at buyers, let's look at sellers. Let's drill right down into this. Buyers are saying, hey, you know what? This is a good run. What are we doing now? So fresh buyers are saying, actually, I'm happy to buy up here. I still think this is good value. Sellers are thinking the same. Sellers are saying, hey, you know what? I think this is a good place to sell, so I'm going to sell it here. And we have a little bit of balance. Now, this could be a shallow pullback. It could be a kind of flag at highs. Something that is basically the opposite of this. We are having a situation where sellers are, yes, hitting this, which is why we're pulling back. There's the primary trend. We've got the secondary pull back into this. So sellers are interested, right? But the key is that buyers are still interested. Buyers are prepared to pay what looks like a bit of a premium, right? So us, if we're just looking at that, it's a premium because 100 minutes earlier, you could have got it way cheaper, but they're still prepared to buy. So that is a clue for us. That is a clue as traders that, hey, if these buyers are still prepared to buy here, all we need now is two things to happen for this to continue. One of two things or both things. The first one is that sellers run out of inventory here and they think, you know what, I don't want to sell any more here. I'm going to wait for it to go higher. In which case, if we have exactly the same pressure of buyers, that's going to give us a boost to the upside. The second thing that could happen is that buyers say, hey, you know what, I want to buy more, I want to buy more, I want to buy more. That becomes more powerful. We get a boost to the upside. Or even better, when you hit the sweet spot, both happen. Sellers back off and think, you know what, I want a higher price for this. Buyers get even more aggressive. They say, you know what, I think this is a bargain. And when you get that supply-demand imbalance, you get a rocket to the upside. Okay, now, bear that in mind as we look at letter B, or the second chart here. This one is completely different. We've got the same high, we've got the same distance, the same time. However, in this instance, we now get an immediate drive lower. So we don't get that kind of small drive lower above. This could be a kind of small drive to here. It could be anything. This is just different from this in terms of this is a bigger drive lower. What is happening with supply and demand here? We've hit this high. Buyers have immediately gone, whoa, this is expensive. Sellers have gone, yes, this is expensive. Perfect. Bang. A lot of suppliers coming in. We don't have the demand. Sellers are hitting it. But more importantly, as we start to drive lower, sellers still perceive that it's a good price to be selling at. They think, hey, you know what? I'm selling here because I don't think it's going to be this price much longer. Buyers are saying, hey, this is a bit expensive. We may push back down to here. So we get this kind of reversal shape where we get a deep retracement into the drive. So when we drill down into that supply demand, we can see the distinct difference. And so as traders, what does that mean for us? If we're inferring that buyers are happy and content with this price, then we would expect the next level to be higher. Now, of course, obviously buyers could have been done here. This could take more time for sellers to step in and we could get this kind of pattern. Of course, that's why we use stops in our trade. However, when we see this little to no price retracement in a trend, and we've talked about this before, that we need to look at the metrics of this, of how aggressive that is, the volume of this, the price, the kind of move in range, the angle of it, all that kind of stuff. But let's not look at that for now. This is what we're looking at now. The little to no price retracement is a big clue into the supply demand imbalance at that moment in time. A bigger price retracement is saying to us, hey, you know what? Sellers perceive this as value. Sellers are getting aggressive. Does it mean that we can't do this? Of course, we've seen that multiple times. That is why we have stops. This is why we kind of look at things differently. However, you know, a deep price retracement is indicating that, you know, buyers aren't quite as aggressive, or they're happy to get a cheaper price. They're happy to step back. It doesn't necessarily mean that's always going to be the case. We might even push the highs and then have a shallow retracement, in which case buyers are like, hey, you know what, I missed this. I had to pay up here and now I'm not going to miss it again. I'm going to be a little bit more aggressive. So, you know, we're trying to think in terms of one, supply demand, and two, what the opposing or the sea of money, if you like, I don't know the best way of putting it, but the kind of group of money that's participating in this specific pattern is going to do. Because if we can estimate that and we can have a good idea of that, then we can place a trade with a high probability of success. So when we see this little to no price retracement kind of pattern, we can infer a little bit more than normal that perhaps buyers are going to continue to be aggressive. Sellers, even though they perceive that as value and they're selling, it's why I've got this stall, this small pullback, if they back off and those buyers stay the same, we're going to get a much more of a blast to the upside than we would compared to this one. So that's the little to no price retracement. Doesn't work all the time, no, but just going on that theme of looking at supply demand, looking at in terms of what people are going to do after you've taken the trade and why they would do that. This we can start to use as a bit of a foundation and add other tools into it to give us good opportunities for better trade entries. And obviously just quantifying the risk as well. So if we can get a better trade entry and quantify that risk a little bit better, give us a better risk reward ratio, we don't have to be right every time, do we? We know that. We can just take the trade systematically and over time, that'll work out for us. All right, guys, see you next one. Take care. Bye-bye.